Hello everyone, and welcome back to the channel. Today, we're diving deep into the foreign exchange market, specifically looking at one of the world's most watched currency pairs, the euro versus the US dollar, or EUR/USD. If you've been keeping an eye on the charts, you'll know it's been a fascinating, if not frustrating, time for the euro. The pair has been stubbornly hovering near its recent lows, and the big question on everyone's mind is, why? Well, a major piece of the puzzle just dropped. The latest inflation data from the Eurozone, and let's just say it didn't exactly bring the fireworks the market was hoping for. Let's break it down. The preliminary consumer price index, or CPI, for the Eurozone came in slightly lower than expected. While inflation is still present, the rate of its increase is cooling off. For the European Central Bank, or ECB, this is a tricky situation. The ECB's primary mandate is price stability, and their main tool to fight high inflation is raising interest rates. Higher interest rates typically make a currency more attractive to foreign investors, which would strengthen the euro. However, when inflation numbers come in softer than anticipated, it gives the ECB less urgency to hike rates aggressively. In fact, it might even give them a reason to pause or signal an end to their hiking cycle sooner rather than later. This is where the versus the US dollar part of the equation becomes critical. Over in the United States, the Federal Reserve has been on a very aggressive rate hiking path to combat its own inflation issues. This policy divergence, where the Fed is seen as more hawkish or aggressive than the ECB, creates a significant interest rate differential. Simply put, investors can get a better return holding US dollars than they can holding euros, which naturally pulls capital towards the dollar and pushes the EUR/USD pair down. The lackluster inflation report from the Eurozone just reinforces this narrative. The market is now pricing in a lower peak for ECB interest rates, widening that gap with the US even further. As long as this dynamic persists, the path of least resistance for EUR/USD seems to be downwards, keeping it pinned near these multi-month lows. So, what's next? All eyes will remain on central bank communications. We'll be listening closely to every speech from ECB President Christine Lagarde and Fed Chair Jerome Powell for any change in tone. Any hint that the ECB is more worried about economic growth than inflation, or any surprisingly strong data out of the US, could add more pressure on the euro. It's a classic currency tug-of-war, and right now, the dollar has the stronger grip. We'll continue to monitor the situation and keep you updated on any major shifts. That's all the time we have for today. If you found this breakdown helpful, please hit that like button and consider subscribing to the channel for more market analysis. Thanks for watching, and I'll see you in the next video.